Hi guys, Sabrina, your mortgage lender here. Today I want to talk to you about the difference between FHA versus conventional loans. What is the differences that you need to be aware of and know about when you are getting ready to buy a home? So number one, credit flexibility. An FHA loan you can get with as little as a 580 credit score and only 3.5% down payment, which we'll go over more in a minute. But 580 is the minimum credit score. Now, technically with FHA, they do allow to go down to a 500, between 500 and 580 credit score would be required to bring in a 10% down payment, however. So if you have more out of pocket, but credit's a little more struggling, there are definitely some options to work there as well. Versus a conventional loan, you're going to need at least a 640, but honestly, the higher the better. So ideally, you'd want to be at least over 680 in order to not rates just to be crazy for you with a conventional loan. So 580 versus 640 or above, that's the difference, FHA versus conventional. Now, the down payment differences, again, like I said, with FHA, as long as your credit score is 580 or higher, 3.5% down payment is going to be your responsibility coming from the buyer's side. So that would be from your own personal funds, withdrawals from a retirement account, or gifted funds from friends or family. But again, does need to come from your side. The down payment cannot come from the sellers. Closing costs can, not the down payment. For conventional loans, standard is going to be 5%. There are programs that'll give you down to 3%, but most likely I would bank on a 5% down payment minimum with conventional, and the more you can bring to the table with a conventional, the better terms you're going to get on things such as the mortgage insurance, which is point number 3. So mortgage insurance comparison. So with a conventional loan, mortgage insurance is a monthly premium that gets added into your payment only if you're bringing less than 20% down payment. So with conventional, it is not the life of the loan. It's rather until you get to 20% LTV. So later on down the road, it could be a combination of paying down the principal plus your equity, the value increasing. You do a refinance, it now pays for more. Once we get to 20%, or I should say 80% loan to value, when we're doing a refi, you can eliminate that mortgage insurance on a conventional loan. Versus the FHA loan. So while FHA is it's easier and it could be a better fit often, especially if your credit isn't as high. However, you are going to have an upfront mortgage insurance premium that is going to be financed into the loan at the time of purchase. Plus, you are also going to have a monthly payment that gets added into your payments, likely for the life of the loan. So, two different things, but good to know. So I hope this has been informative, and figuring out which one is best for you. There are more things factored in, as in, is it your primary residence? Is it investment property? Things like that that we can go into. Reach out to me. You can email me. You can call me. You can text me with the information on the screen, or you can look to the link to schedule an appointment that should be in the profile. So have a great day, you guys. I hope this has been helpful, but make it a great day, and I look forward to connecting soon.